Hi, this is Mike Maloney, and a few months ago I did a video called Danger, Divergence Greatest on Record, and it was about how the stock market was diverging from base currency creation. If the monetary base went up 10%, so did the stock market, and it was doing that since 2009. If it fell by 10%, so did the stock market. And what I was showing is that the divergence, the amount that the stock market could crash if we hit a rough patch was the greatest since that correlation began between the stock market and base currency. And then I did a video called Man the Lifeboats, the Economy is Sinking, and that was about how high-end real estate in New York was falling suddenly, and it also showed some nationwide data and some other economic factors, along with the high-end art market just totally falling apart. Then the next video was how the year-over-year growth in GDP has fallen below levels where recessions usually start, where almost every time in the past when that growth level gets down to levels as low as we are experiencing now, it means that we are currently in a recession. And then the next video had government revenues, and it shows the year-over-year growth in those falling to levels that we have not seen unless we're in a recession. And so I made a video called Recession Here Now. And I believe that that's absolutely true. I'm going to update a little bit of these things and give some more supporting data. So I presented the New York falling market for trophy homes in the sky. Billionaires Row is dead. This is an article that I didn't present, but I probably should have. The sales in the East Hamptons had fallen 53% from a year ago, and the median price of the homes sold had fallen 54%. And then just last week, or about 10 days ago, the Vancouver housing market implodes. Average home price plunges 20% in 1 month. And the sales, there were only 3 home sales in West Vancouver between August 1 and August 14 this year, compared to 52 during the same period last year. That's a 94% decrease. And you see Greater Vancouver, and they're talking about West Vancouver here, so this data. The homes sold during the first 2 weeks of August in Greater Vancouver dropped 85% on average. Richmond, a 96% drop. So this is enormous. And then just yesterday, they came out with, I've never seen anything like this before. The housing markets in the Hamptons, Aspen, and Miami are all crashing. And this one shows, I already gave you the Hamptons data, but this is Aspen, where they've got a $2 billion a year real estate market that's just evaporating, down 42% for the first half of the year. And the market for these $10 million homes is in a nosedive. The average price in Aspen is $7.7 million. So it's hard to say, for the people that are in the middle of a bubble, it's sometimes hard to recognize it, but that should be ringing alarm bells. Sales volume in that county was down 42%, and single-family home sales in Aspen are down 62% in dollar volume, and the homes priced over $10 million are down 60%, and this just goes on and on. And part of that is there was a lot of cash leaving China. People trying to get their currency out of China, and people that are in the know, knowing that there is something wrong that's coming. And what you're seeing in China, Cathay Pacific crushed as Chinese corporate travel collapses. So this is the passenger yield, the cargo yield in Hong Kong dollars. So the airlines there are not doing as much transportation of goods and people. And then a few months ago, I did one on the amount of rail traffic in the United States has been dropping significantly. And what's interesting is, in the United States, we've got this is the Dow Jones Industrial Average, and this is 1 year's worth of data. And what you're seeing here is we were at some new highs, but not all that high. And then we broke out into these brand new highs over the past coming months, and everybody is trumpeting how the stocks are in this bull market and it's going to be wonderful and everything. But here's gold over the same period of time, rising almost constantly. And then if you take the points on the Dow and you divide that by the price of gold, what you end up with is the stock market's value measured with gold as money instead of dollars, which is currency. And what you see here is that gold is buying you a lot more. The price of a lot of stuff has been falling in gold, almost everything, since late last year, November, December, when gold made its bottom. It's been outperforming just about everything. And here what we see is the value of the Dow has fallen from almost 17 ounces of gold to less than 14 in that time period. That is a huge crash of stocks relative to gold. And then I promised you an update on that divergence data. Now, I've had people write in and ask why I multiply the Wilshire 5000 total market cap index by 47. And, some people think that I'm probably trying to fool people or manipulate the data. No. I want to present these charts from the Federal Reserve's website because it just gives it that much more legitimacy when it's their data and their charts. And the thing is, you can't put two different scales on one chart. If I could, I would put the Wilshire 5000 scale on one side and base currencies scale on the other. But the Wilshire 5000 is currently at 97. It's just 97. It's an abstract figure that's done from a formula, a calculation that they do on all of the stocks that are in the basket of the Wilshire 5000. I have to plot that to show you the correlation. I have to plot that on a chart that is measured in thousands of millions or thousands of billions. So this is $4 trillion. And I've got to put 97 on there. Well, that means that this blue line, the stock market, the Wilshire 5000, would just be a flat line down here and you wouldn't be able to see the difference. What I'm interested in is if base currency goes up 10%, 50%, 100%, 200%, does the stock market do the same thing? And the answer is yes, without a doubt. The correlation is so tight that it's absolutely impossible that this could be a coincidence. But Janet Yellen did the tapering and stopped producing more currency back in late 2014, and the amount of base currency has been shrinking since then, but the stock market has these big highs, and this gap, what we see here is that once it stopped, it came down and crashed back to it. It came down and crashed back to it. It keeps on coming back and touching it, touching the base currency level. It's probably going to do it again. We've got a recession that has already started. Gold has been outperforming the stock market, so the stock market, even though it's setting these new highs, has been getting cheaper and cheaper and cheaper measured in gold. And I think you're going to see a very large event starting to unfold during the rest of this year. It's going to be spectacular. You want to try and make sure that you're on the right side of things. So I believe it's in everybody's best interest to really study this stuff and make your own plans on what you're going to do. Anyway, if you got anything from this video, if you learned anything, please like it, share it, and subscribe to our channel. We'll see you next time. Thank you very much.